All righty, welcome everyone. It is Tuesday, the 31st. It is Halloween. This is Kevin Hurley. Welcome to our Hurley Investments Financial Services commentary. Now, I am not speaking. I am hooked up and hyped up on sugar, so I'm hoping this will be a quick 20 minutes, maybe half hour. I will get this posted for you, even though I'm going to be off traveling, so Dave Westlake should get to it. But I will have this up and for you guys to see, hopefully by Wednesday night. But the short answer is busy. It's a travel week. I let you guys know I was also going to be trick-or-treating, so I'm getting this done right after the stock market ends here on the 31st. What I want to talk about today is why we do what we do. And I'm going to say this, why we do what we do, even though we just had another, 1.5% October. We do what we do because of the unknown. I have never guaranteed anyone a profit or a return on their portfolio. I can't do it. I won't do it. That would be stupid to do. What I can do is say, hey, I should be able to make up some of the downward movement anytime our stock market goes down. I might not catch every penny on the way down, but whatever I'm able to make up on the way down is profit when things come back up. I can honestly tell people, hey, I was profitable in 2008. And what we do comes right down to Apple. Apple has done really good. I think Apple will have a banner quarter. I think they'll sell more iPhone 8s or more iPhone 10s. You're going into the holidays, so of course Apple is going to have, well, if they don't have a good launch of their 8 and their 10, they're going to have a good Christmas. So no matter how you look at it, we're looking at a phenomenal Apple report. That doesn't mean the stock will go up. So if you take a quick peek, and I kind of like doing this because this is who I am. Cost basis on Apple. My clients on Apple are great. $91.48. It's actually closer to $97 because of protection that was used in the past. So I spent $3.40 to protect Apple at 160. You'll notice Apple has protective puts here at 160 as well. Chances are Apple's going to go higher. It's already traded up in that 170 range. It's going to go higher. But how much higher, we don't know. What I do know, if I take my cost basis here of being 96 and I add 340, I might have a cost basis of $100 per share on Apple with protection, with the right to sell it at 160. Now I know this is out of the money because Apple has already traded higher than 160, but I'm hedging that it's going to go even higher, knowing that the last couple times it has not gone higher. Rule of thumb though, if I've got the right to sell at 160 with a cost basis of 100, I am in a risk-free trade and I am up $60 a share on more of my high net worth individuals that have Apple. Obviously, the more money we have, the better I can usually do for individuals. But Apple going into its earnings, even though I think it's higher, even though here at the close of today I was down 13,000, I have the belief that Apple's going to go higher, but I'm not going to let it all ride. I'm not gambling in the stock market. I'm willing to spend $3.40 on insurance that I probably won't even be able to short against, but that's just going to be out there, and so be it. I am going to take a profit. I'm going to take a loss on my insurance, knowing my overall profit on Apple is much greater. With that said, why we do what we do? Well, Baidu, great earnings, didn't quite didn't meet the revenues, but we were told we're not going to. Same scenario. I've got a cost basis of 185. I have the right to protect it at 270. And actually, yeah, that is including my long puts. So if I've got 270 minus the 185, yes, I have a whopping $85 of profit. Baidu has been one of my saviors this year. Again, it's my profit center. I'm protected, and thank goodness I was, because the stock has fallen all the way down to 239.30, which means I've got a profit in my long puts where I paid $11.62. They're up at 30. I've got a profit of $20 and 27 cents. So I'm going to just do some simple math because it's easy for me to do. It's had a pretty good fall down. And because of the pretty good fall down, if I do my math, $20.27 times, we're going to say 500 shares. Geez, going to try that again. $20.27 times 500 shares give me $10,135. If I take that and divide it by the cost of the shares right now, 239.35, that is 42 shares that I could buy for someone with 500 shares. My people have 1,000 shares, 42. I could buy 84 shares. People that have 1,500, I can buy 126 shares. So my 1,500 people that started way back when was 800. We've been adding shares throughout the years. My 4 big guys are going to get an extra 100 shares of Baidu added in. It's what I've done, and I'm going to do it again in the past. I'm going to take this profit, and off we go. It's why we do what we do. Yes, I think Apple's going up. Yes, I thought Baidu was going to go up. I was wrong on Baidu, and boy, we took a pretty good hit. $30 hit, and I'm making up $20 to the downside. I'm making up 67% of the downside movement, and I don't have to worry. In fact, I'm just as excited to see Baidu go back down to 200 as I would to see it go up to 300. It is what I do, and it's, you know, the short answer is I'm excited for it. I'm going to be just as excited to see things head up as I will to see them head down. So that's what we do at Hurley Investments. We're going to let you sleep at night. We're going to make up some of the downward movement, not all the downward movement. We are here to give the ability to truly protect your portfolio, not by diversification or hedging one asset against another. That doesn't work. They can all fall down. So what's happening this week and why? Well, we had a lot go over yesterday. We had PCE prices, right? They came in at 0.3 versus an estimated 0.4. The core came in, core PCE, which is inflation, came in at 0.1 versus an estimated 0.1. So real inflation's about the same. More importantly, personal income, can't spell worth beans. Personal income came in at 0.4 versus an estimated 0.3, better than expected. Personal spending, driving force behind our GDP, came in at a 1.0 versus an estimated 0.8. Could people be Christmas shopping early? Maybe. Employment cost index came in at a 0.7 versus an estimated 0.6. More importantly, and somewhat I think that kind of brought our market up today, well, which kept our market at least brought up in the morning is the best way to say. Chicago PMI 66.2 versus an estimated 62.0. That's really about the best Chicago PMI I've ever seen. Consumer confidence. Really, unfortunately, if you're a Democrat, you won't like this. Consumer confidence came in at 125.9 versus an estimated 21.5. Keeps soaring higher, ridiculously higher. And the Case-Shiller was right on par, 5.9 versus an estimated 5.9. So our economic events are pretty, well, they're encouraging. But more important, earnings rules the trend right now. And what I mean by that, well, if we take a look at the earnings that we have here, boy, we just have, and I think I put it in here, yeah, AKS, BP, CMI, Kellogg's, MasterCard, XDL, Devon Energy, Pizza Hut, I think is Domino's, right? Wednesday, TAP is Budweiser, C-Trip, GoPro, Shake Shack, Tesla, which I'm going to say is going to go down, RIG, which might go up, but not too important, Ralph Lauren on Thursday, Yum, Polo Loco, Floor, Fossil, although Fossil actually is probably not, I think Fossil actually, I probably have that wrong. Fossil's next week, I believe. Starbucks, wouldn't surprise me to see Starbucks finally rebound. We have Duke Energy on Friday. Really, this week will come down to earnings, or on Friday, the average work week. That's what's going to push our markets higher. I don't have any international trades when we have so much going on. Our big push is not internationally, and I'm sorry, I almost forgot. FOM rate decision. It's a non-event. You will most likely see the markets down in the morning and will rebound in the afternoon. The FOMC meeting, they're not going to raise rates, but do expect them to say, hey, I probably will have rates raised in December. There is a chance, I believe the name Powell has been thrown around as our next chair. I wouldn't mind seeing Yellen. If you see Trump throughout the week, throw out any comments that it's not going to be Yellen, it's going to be Powell, you might see the markets pull back or have a freaky day where they freak out just a little bit. With that said, I do think the markets are going higher this week. Dow Jones overbought and bullish for a whole month. We just went one whole month with the Dow Jones being overbought. With that said, this is why I don't place trades on being overbought or oversold. You couldn't have counted on a pullback the whole month of October. Well, Kevin, it pulled back in August. It did in June. Yes, it did. You could even say it did in September. But historically, you don't see indexes nearly this long overbought. You can see stocks overbought or oversold for months. Usually not with indexes. You can see that artificial push. But let me make this comment. I think you're going to start seeing it harder to make new highs into next week. I think on good news, you might see some small pullbacks. In fact, I might go on record saying this is the reason we might not see a Christmas rally this year. We may not see a Christmas rally based on the fact that, we're so overbought, and we've been overbought for such an extremely long period of time. Maybe after this earnings season, we'll see the pullback and we'll lose our Christmas season. Not putting that out there. I'm just saying there is a risk to that happening this year because of being bought for so long, overbought for so long. S&P, we had a little pullback. We're still over. Well, we're no longer overbought, but we are bullish. I would say we're pretty close to being overbought. This is a better indicator than the Dow. The Dow is only 30 stocks, but still close enough to being overbought that I do think we'll see a harder time making new highs into next week, maybe even the end of this week. Definitely, though, it makes me worry. And our NASDAQ, nice bounce off of 65.50. We are just in the overbought territory, and the NASDAQ is more likely to stay overbought for a period of time. But when you made the comment about, hey, we could lose our Christmas rally, last time we were overbought, look how quickly we dropped. 2 days we went from 61.70 to 59.96. And then, a week later, boom, here we were, maybe a week and a day, we're back to where we were at. But it was choppy and it was kind of stagnant through a month or two. I'm expecting now to see that towards the end of the year. With that said, that would be my expectation. I'm not going to trade accordingly just yet. I am going to go out there and say, hey, we might look for another 2% up month in November. It's worked. It was pretty close for that, 2% through October. Came in at just over a 1.5%. Earnings, obviously. Big earnings on Thursday, Apple and Alibaba. Tomorrow, don't forget Facebook, Soda, and Clorox. Those are the big ones I'm watching. And I've got a couple interesting columns here. The S&P is about to do something it hasn't done since Lyndon Johnson was in the White House. David Einhorn says value investing will come back after the dot-com bubble. The stock market's valuation is at a point where it is irrational. Just some things that I read that I thought were important to you. Guys, I'm going to thank you for allowing me to skip today and not be here. I'm trick-or-treating with my kids tonight. I will get this posted as quickly as I can. I am traveling, so I am going to have to run it over through Dave Westlake to get it done. But, guys, appreciate your time. Have a wonderful week. Don't eat too much candy, and I look forward to seeing you next week. And I believe I'm going to be up in Idaho. So, guys, you see me driving by, wave to me. Talk to you soon. Bye-bye.